Good Morning Texas Home and Wealth, sponsored by Rodney Anderson with Supreme Lending.
Are you on an adjustable rate mortgage? Well, now may be the time to get off. Our mortgage expert Rodney Anderson joins me with more information this morning. But first things first, what is an adjustable rate mortgage?
Well, it is a loan that is normally fixed for only a certain period of time. Normally, you'll have a 30-year or 15-year fixed rate mortgage. An adjustable rate mortgage is normally something that was fixed for 5 years, 7 years, or 10 years. And therefore, after that period of time, the interest rate can fluctuate based on the market. And a lot of people have had these on their home loans for a very long time. And they've been very lucky with it. But we are in a different type of monetary policy. The Federal Reserve is looking to potentially raise rates 9 times over the next 2 years.
Wow.
And what this means is people on adjustable rate mortgages after that period of time could get really hurt financially.
So is that why you say we need to get off?
Yeah, I tell people get off your arm. And the reason being is if you have a 5-year arm, for example, and you're 4 years into it, after the next year, normally on most loans, that your interest rate could go up as much as 5%. Imagine you're sitting there at 3.5% and your interest rate starts climbing. And a lot of people should get into a fixed rate mortgage in today's environment because we've completely changed.
It sounds like those payments are really going to skyrocket.
Yeah, a lot of people. I saw a gentleman the other day that he had an adjustable rate mortgage. He was up for his annual renewal, and he had a large loan. He had an $800,000 mortgage. Okay. His payments went up about $1,200 a month. Think about what this can do to your financial budget.
It hurts me.
And so a lot of people have had this benefit. Many people have stayed on them and they've gone, wow, this has been a great loan. It has been a great loan for so many people, but now would be the time to get off an arm because it can really damage you financially.
But should everybody get off?
If you are planning on living or moving out of your home in maybe a year or two, know what the rate could go to, but no, not necessarily for you. Or if you did a 7-year or 10-year adjustable and you've only been on it for 2 years, you may not need to get off of it. But if you've been at the end, if you're at the very end of your term here, or you've been playing the games for years and years where now the rates can go up, then I would definitely look at refinancing.
How long would you say it would take to refinance an ARM, adjustable rate mortgage, into a fixed rate mortgage?
Yeah, our goal is always close them in 15 days. So we're having a lot of people pick up the phone and finally call us on this because this is a big hot spot. And just ask yourself, could I afford my mortgage if my rate goes up 2%, or could I get it? Because it could go up 2% this year, and then it could go up 2% the next year, and then it could go up again. So one thing that you need to know is if you have an adjustable rate mortgage, what's the most my adjustment can be, and how much can my payment go up, and can I afford that?
There's a lot you have to think about here, and I love when you're on. You give us so much information in a small amount of time, but you're giving us the most important. But if there's one message to be sent, it's to look into that adjustable rate mortgage.
Yeah, absolutely. Get off your arm right now. Yeah. Look at refinancing and save some money.
You don't want to continue paying an arm and a leg. And I mean, this arm that's connected to your body, they're pun totally intended. So give Rodney a call. Here's his number. It's 800-EXPRESS. Also check out his website for more information. It's rodneyanderson.com.